Hi there, traders. This is Brad Gilbert with the Forex Market Insight for the 24th of May. Now, if we just have a look at the major currency pairs here, there was a pretty wild sort of day of trading yesterday, pretty much led by dollar yen. Sort of broke down through sort of 110 to this 80. It was already below the cloud yesterday. If you look at yesterday's Market Insight, you'll see what we'll talk about, where it possibly could have fallen off the radar. Now, that sort of kicked into gear. During the European session, euro was around 117.60. We had some German manufacturing numbers come out extremely weak, and that was enough to send euro lower. Took all the yen crosses with it. Sterling, we had a bit of a reaction here to slightly weaker UK CPI figures, but it's managed to pick itself up off the floor. And dollar CAD once again all over the place. But the latest reaction is following the Fed minutes, right? And that's actually put most of the currencies sort of back to where they were yesterday. Now, even dollar yen sort of had a bit of a retracement. It's not exactly trading sideways, still a negative bias, but it has corrected some of that move. Same with euro and sterling, okay, and also dollar CAD coming back into the range. Now, the Fed basically, they've come out and basically sort of, they're looking at 2, potentially 3, or there's definitely 2 rate hikes on the calendar for 2018, potentially 3, depending on the data. But the fact that Powell, the Fed chair, and a few others are still talking about letting inflation run over that 2% band, it's a little bit dovish. They're like sort of saying, yeah, we'll raise rates, but we don't want to do it just yet. So that's a little bit of a, it's a bit of a to and fro situation. So what you have to do is put that into context where the currencies are. Now, the only thing that we can do is the Fed is still on a hiking probability, on a hiking sort of stance, but they're not. It's not just not as aggressive as it was, say, a few meetings ago. So that's sort of seen the US dollar slide a little bit on the back foot. Now, on your charts, once again, we've just seen these major currencies flip around. All you're basically doing at this point is coming back and just redrawing your trend lines to the current levels of support and resistance. Okay, there's not a lot to do on euro and sterling. They are still sort of just heading slowly down, hopefully coming back towards a good level to sell. And once again, we've got that new high in dollar CAD, so you're just really tuning up your levels. And now this sort of gives us a bit of an overall bias about what's going on. Now, let's just have a look here. If I just come back to, just want to have a look at the US dollar to really focus you in on that aspect. I mean, the dollar itself, the dollar index, okay, still cruising to the top side. But what we are sort of seeing is a little bit of a drift back lower. That's not a change in sentiment. The overall sentiment for the dollar is up. We are seeing, funnily enough, the sting is taken out of those US treasuries, the 10 years here, drifting back below 3%. Now that's sort of a good thing as well. It takes a bit of pressure off the dollar. If it keeps going though, it may put a little bit of downward pressure on the dollar. Now those US treasuries have probably drifted lower just because of the text that the Fed were using. Okay, we're going to let inflation cruise above that 2% mark for some time. So there's no clarity as to when they're going to raise rates. They will definitely be on for 2. It gives them a bit of breathing room to make sure the economy is really moving before they do raise rates again. All right, now we can see what the dollar's doing. We can see what the major currencies are doing. It's time to really come back and have a look at where the focus is today. Right, there's a few things to sort of keep an eye on. We had some trade balance figures here out of New Zealand. Okay, so just having a look at those, a little bit stronger than expected, but the trade balance doesn't have any economic consequence, so it's not a major number. Now, we do have UK retail sales. Once again, this number was a bit of a shocker last month. They are looking for a bit of a rebound in the numbers, so that'll be, highly anticipated by all the traders in Europe and anyone else who's online. Now, don't forget, yesterday we had some German numbers which really got the euro moving lower. So just keep an eye on those GDP numbers out of Germany. If you can, have a look. It may give the euro a bit of direction early doors before that UK data. Then as we come into the North American session, you just got those weekly jobless claims as well as the existing home sales. Now, the Fed are looking at all numbers. each little number that comes into play, it adds a little piece to the puzzle. So if these numbers are as expected or even slightly stronger, it adds sort of more weight to the Fed view that they will hike rates sooner than later. And that's pretty much it. So there's not a lot of economic data to come out today. Once again, the major focus for most traders, okay, during this session, especially in the Asian session, will come back to the to dollar yen. And now it's in the middle of nowhere. It's a little bit trickier than what it was yesterday. All right, you're sort of looking at the currency right in the middle of nowhere. Japanese traders will be out of the game because it's below the cloud. And we've just got that new pretty fickle support trend line down around 109.60. You know, it's hard to see. If anything, you want to be looking at the equity markets for some potential direction. Now, just looking at those equity markets, at this stage, they are due to open, the Nikkei is due to open up minus 100. So just keep an eye on that as we sort of go forward into what we've got. There's some foreign bond numbers here, you know, bit mixed. I wouldn't really sort of read too much into it. Potentially, the Tokyo core CPI numbers on Friday are a better number, but just the top X is just opening up there as well, just as I speak. I can just clear that screen. So just keep an eye on this. If the Nikkei drifts lower, okay, don't forget it was supposed to open up minus 100. That's your benchmark. If it goes below minus 100, you should see downward pressure on dollar yen. If it steadies itself and comes in less than that, well, that's a positive, and you'll see dollar yen slightly rally. All right, and that's pretty much where we are. I guess the only last thing to really have a look at is looking at the overall data coming out. So plan your schedule if you can. UK retail sales. So we've got 8 hours before that comes into play. One thing to note, which is a really good sign, once again, is see the major pairs here. They're back correlating as they should be, and the dollar pairs are negative, other ones positive. So that's a good sign. The currencies are basically behaving as they should against the major pairs. If we come down into the day analysis snapshot, you can see where everything sort of sticks out. So to me, sterling and euro still in that bearish downtrend, but the central banks themselves have been very quiet. If anything, the Bank of England was talking up, you know, potential inflation, everything else. So that's a little bit of a question mark over the Bank of England. What we do have is the Fed is still on a hiking stance. So they are, as far as a fundamental outlook, the US dollar is still the only prominent one. For a good fundamental outlook itself, we're looking for the central bank and the economic data to be in the same direction. That's where we are going to get clear fundamental direction. At this point, we have some of the data pointing lower, but it's not enough to give us the overall outlook as being down. But you can see on the technical perspective, euro and sterling lower. The rest of these other currencies, Aussie, Kiwi, and dollar CAD, the commodity currencies, all pretty much trading sideways or a bit of up and down, not very conclusive. Dollar yen to me is still technically a sell, even though it's in the middle of nowhere. You've got to wait for a good level to sell there. Dollar Swiss, bit up and down. It's not sure where it's going at this point, but the dollar index itself is still marching to the top side technically, and for me, fundamentally with that Fed outlook. All right, so that's the day analysis snapshot. We will be coming back to have a look at the next best trades. We did have a CAD yen trade, probably not patient enough to let it run. I thought the major action would be in the European session, so I thought that trade there was just going to be, you know, one to add to the account. As it turned out, it dropped another 100 points. It was a little bit disappointing in the end, but I have still been very patient, waiting to sell euro on a bounce back up towards 118.20. I'll have to adjust that entry level. I am using Trendline Trader for that trade, so it's already going to be adjusted automatically, but that's where we are with that. All right, and that's pretty much it, guys. The day ahead, Asian session is going to be pretty mild. I would expect the European session to come back into play, obviously with the UK retail sales, and then you've got some those weekly jobless claims and existing home sales out of the US. Probably enough to get that market moving. We'll see how the market digests that Fed minutes over the course of the next 24 hours. That's when you can really see the market assess the Fed, see what the reaction was on the currencies and the bonds, etc., and then they start to move again. So we've got a bit of a waiting time at this stage. So I wouldn't waste your time over the next, well, you're probably looking at the next 7 to 9 hours. It's probably going to be pretty quiet. Keep an eye on dollar yen. Yen crosses are all over this shop. So probably technical trades at this stage. All right, guys, that's the Forex Market Insight for the 24th of May. Have a good day, and we'll see you in the trade zone. Cheerio.